Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the July 7th. Is it the 7th already? How about that? July 7th, the terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Taco Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now we got a mixed bag out here. The Dow's down 200 points, 209 to be exact. S&P off 10. NASDAQ 100 up about 20 points. Russell's off 11. Semis are down 10. Gold's up $15. Silver's up a nickel. Light sweet crude up a dime. Natural gas up a nickel. Big move there. You got the 30-year Treasury up 25.30 seconds. Shopify leading the charge dollar-wise. 42 buckaroonies. Tesla's up 26. Novavax up 27. That's 35%. Regeneron Pharmaceuticals up 17. To the downside, Booking Holdings off $27. Amazon 17. Quidel Corp off 13 or 5%. Transdigim Group down 12%, nearly about $3 out there. So what are these markets doing? Right? What are these markets doing? Isn't that the question out there? One possibility out here, and it's a real possibility, is the following. If we take a look at just simply understanding the seasonal cycle of the Dow. Now, this is a 86-year history of the Dow, and I actually went back day by day for each year and averaged out each of those trading days out here. And what that generated was the following report out here. Now, I've identified a few dates out here. The real dates that are of significance for you and I would have to be July 21st. Why July 21st? On average, you know, they talk about the sell in May cycle. Well, here's the BS on that. Here's before Steve shared with you this chart that obviously takes into consideration every sell in May. And yes, at the beginning of May, the middle of May, there is a typical short-term high, but then we get this summer move, typically around June the 25th, that pushes prices up into late July before we then see the summer swoon, so to speak. That summer swoon always taking us down into that October timeframe. What do we have going on around October, November? We've got an election cycle. So if we take a look at what the markets are doing right now, they may just be fulfilling this pattern. Now, look, we don't use these targets to the day. Sometimes they do work to the day, but don't hold me to the 21st. But what we can see out here is a market that hasn't given up the ghost. If it hasn't given up the ghost, if it hasn't been able to bust them out to the downside, well, then maybe this is the pattern that we are in. So 2 weeks from today, by the way, is the 21st out there. So we may have another couple weeks of this. Will we or won't we? I don't know. But keep that in consideration. If I say hasn't busted through any support, well, And we do have two different types of markets out here. We've got the NASDAQ. The NASDAQ itself, that is just simply because of this wave of creative destruction. Go back and read the works of Schumpeter out there from a couple hundred years ago, and you will see that that is what we are experiencing right now. And that's not going to change out there. And that's why I have shared with you or suggested to you, we're waiting for the NASDAQ to make a top out here, give us some type of topping signal, because all the markets are going to need to move in the same direction out here. But the NASDAQ is not the place that you want to be looking to go short. I'll repeat it again. Don't go short the NASDAQ. It's too strong out here. And no, it's not going to make the detour to the downside and lead the markets lower. It didn't lead the markets lower the first time around. So why would it lead the markets lower this time around? They're the big winner, chicken dinner. There is the indice. That is the group that you want to be able to buy that next move lower out here. The indices that are struggling, they're not really struggling that much right now, but they are struggling, the Russell 2000 and the Dow. Those are the two sandboxes to play in to the short side. To the long side, it'd be the S&P, and it would be the NASDAQ out here. So let's take a look at what we know as of 1:12 in the afternoon. If we take a look at the ES Mini, we can see a little descending trend line out here, and that is contained price, but price is also above the top of its profile, 31.29. So what does that mean? It means it's bullish. Flat out, the S&P 500 for its daily time frame is bullish. It's not bearish. It's running into a descending trend line, a resistance zone, sure, but it's not bearish. It's just not. It's trading above resistance, the top of that daily profile. The NASDAQ, again, trading above the top of its profiles. Nothing new that is out here. Even the Dow, what the Dow has done today, what it did yesterday, closed above its daily profile. That was the first time. Today could be the second time's the charm. I don't know if it is or will be. We'll know at the end of the trading session out here. But the level to be watching is 25,945. If price closes above that, pretty good chance what the Dow is going to do is go target its descending trend line, and that's in about the 26,950 level. We take a look at the Russell 2000. Yesterday, a slight close above the top of its profile, so that was bullish. Right now, it's trading out at 1425. The top of its profile is 1439. Again, a weak instrument when we take a look at the other three in relationship to their market profiles out here. So we don't really have any kind of a clear signal here in the Russell. Hasn't broken down. You can see the rising trend line. So I've added a bunch of trend lines out here so you can see those. They can help to assist us with regard to what the markets are doing. So at this stage here, we've got topping patterns. If you just take a look at, so let's take a look at the Russell as an example. Here in the Russell, you'll see a nice little Gartley sell pattern. You'll see prices traded below Stevie's green line. It has been below Stevie's green line for several weeks out here. So sideways-ish type move. I can't even get above Stevie's green line. Right now, that green line print is 1446.60. But what it also hasn't done is busted below Stevie's red horizontal line. That's a TD9 breakout level of 1290.90. Things won't get rocking and rolling to the downside until you see the Russell 2000 close below 1290.90. But this has a bearish pattern in play. If we take a look at the Dow, it also has a bearish pattern. I believe this was wave number 7. Yeah, wave number 7. Wave a TD9 count top out here. And price right now trading right at or just below, actually below Stevie's green line out here. So again, a weaker stock. Now the NDX 100, strong like bull. However, what you and I are waiting for, don't know if it'll occur. But if we do see some type of bearish reversal candle, well, then we'll get a Rhodes momentum indicator top. Because price is stretching higher with less relative energy. Never a good sign, but not the time to go short it or the other indices just yet. Hope you're right there.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We'll get to the questions in just a few minutes. We've got about 6 that have come in. I just want to go ahead and finish off because I can read minds. Isn't that a beautiful thing? Somebody's out there I know saying, Steve, these markets are not going to go back to the March lows out there. And if that's your thinking, okay, hey, cool. Have at it. Now, if I take a look at this chart here, this is important because I just simply go by looking at data. And if that were the case, what we would see is a concentration of capital that is in the United States. And it is not there. We have the bottom with this. We're now 16 weeks. This is week number 16 into that March low out here. And we can take a look at this, looking at markets priced in our major currencies out here, our reserve currencies, the euro, the yen, the pound, and the U.S. dollar. And it's important to take a look at how each instrument is trading in those currencies because you want to understand what's that guy or gal in Europe thinking, what are they thinking in Japan as to their trade, because they're the ones that are also investing in the in global markets, certainly U.S. markets out there, and as well as in the UK. So here we can see that the U.S., the diamond, so we're going to take the weekend to see out here, not the weekend to see, but really the trophy horse as it relates to international markets, up 36% out here. And that's not even close to being the leader. You've got Germany, 52%. There's no way that global capital believes, well, maybe you think otherwise. I'll say there's no way global capital believes that putting their shekels, putting everything over in Germany is where that global flow of capital should go. Just ain't no way. This is just counter trend rallies in this bear market out here. If you take a look at Japan, only up about, between 13 to 23%, depending on which currency, whether it's U.S. or whether it's the pound out there. So there's no concentration of capital. The only concentration of capital that we could point to here would have to be Germany. And no way. What a concentration of capital looks like is this. Here, now we're just going back to our March of 2009 lows. That was 45 quarters ago. And here you can see you've got the Dow priced in pounds up 467%. In dollars, it's 332. So it's important to understand the international capital flows out here, and nothing is even close to the performance of the U.S. stock market when we go back to the March 2009 level. This is what a concentration of capital will look like when it happens, and it will happen again, or is likely to happen again out here inside the markets. The NASDAQ, whole different picture. We sort of covered that. So let's go to some of the questions that are out here. Make sure we can get to all of these. We've got Jared writes in, and Jared says, can you take a look at ticker symbol NAT today? So let's go take a look at that. Where do I put it? NAT. Let's put this up on the triple out here. So that is Nordic American Tankers, which had one heck of a nice run up to about the $9 level. It is pulled back. And so, Jared, right now what it's doing, it's trading with inside a bearish structured profile out here. The support level is 402. Resistance is 437. Any close above 437 would be very positive. Any close below 402 would suggest to you or I that price is going to go make a run for 364. What's 364? 364 would be the bottom of its weekly profile out there. So a possibility, but that is not going to. Now, there have been a couple hammer candles out here, small, but still hammer candles. So it is trying to form this bottom. One of them was on June 30th out here. So it is trying to form this little bottom on the daily time frame. If I look at the other charts, my other charts with the daily time frame, what we're going to see is a TD9 count. Are we going to see that? What are we going to see? Yes. So we're going to see a TD9 count out here. Let's take a look at it. Here's another hammer. This one was from June 24th. And prices remained above that. That was also the TD9 count pattern. As long as price is above that level is 405, the pattern remains in effect. The problem here, Jared, is that you need to see price also get above Stevie's red line, which is priced at about 421 right now, and this is trading at 413. So it needs to get above that in order to get the bullish legs to get up to 437, and then most likely to the 506 area. If I look at the weekly time frame chart here for Nordic American Tankers, NAT out here, what do we have? We have that this week could be week number 8 of a TD9 count, but if this is going to, the weekly chart is going to identify a TD9 count pattern, it would have to be a lower low than last week's low, this week, next week, or the week after out there, and that still keeps that bottom of that weekly profile, 364, in place out there. So, Jared, overall, you've got a bottom signal on the daily time frame. Support is held until that support level fails, and again, that would be 402. This looks like a possible trade to the upside. Let's go to our next question out here. Jim writes in. Jim says okay. Well, Jim wants to also talk about. No, different. Okay, so I watch MJ. So let's put this up here. MJ is the ETF for Alternative Harvest out here. So that's the pot stocks. And Jim's question. Let me read it now. I'll read it to you. I watch MJ. Notice the bottom. But I'm hesitant on entering a long trade when it seems like we're looking for a pullback in the general market. What are your feelings on going long a stock or ETF when it seems like it's getting close to a top in many of the indices? Well, not all stocks are going to move in just one direction. It's not that easy out here. So I think that this is a question, Jim, that is really something that you have to answer, and I think you have answered it in your own mind that you'd prefer not to, and that makes a lot of sense. And I'm not going to try to talk you out of that. All I can say is not all stocks, even in a market that's moving lower, not all stocks are necessarily going to follow. It is helpful to understand what's going on. So when it comes to MJ specifically, now this is the ETF. So let's take a look at the bottom pattern that Jim is looking at. So let me put this up on our screen out here. We'll pull it over just a moment. And I believe we're going to see a TD9 count. So I believe that's the bottom that Jim is referring to. And so we'll see that was bar number 8 out here. Now this is, that's the weekly. Jim was talking about the daily. So we've got obviously 2 9 counts out here on the on MJ, the ETF. Come on. There you go. Calculate. So here's the 9 count on the daily time frame. And that was on the trading day of June the 29th out here. You've got support at 1271, potential resistance at 1333. Any close above 1342 ought to take price up to the 1398 level. That's the resistance level set up by that TD 9-count pattern. So your question is, what do you do when you're anticipating that the market is going to pull lower and you've got buy signals inside an ETF like MJ? Well, I think one of the things that you've got to do, no matter what we think that the market may or may not be doing, Jim, is we've certainly got to go take a look at the holdings with inside of MJ. So here is Alternative Harvest, and we can take a look at here are all their holdings. So the number one holding, I believe this was as of yesterday's date, is GW Pharma, about 11%, Kronos Group, 9%, Canopy Growth, 8%, Corbus Pharmaceuticals, 5%, Aurora Cannabis, 5%. So those five make up 10, 17, 26, 36, about 37, 38% of the entire ETF. So what I would do is start taking a look at each of those. I would look at GW Pharma. I believe that is GWPH. Is that correct, folks in the den? GWPH out here. So let's just take a look at that number one weighted ETF for you, Jim, and we'll do that when we get back from this breakout here. See what its message is. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the number one market timer for the S&P 500 in 2018 and the number two market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
folks, Dow down 192, S&P is off 8. So let's go back to our question from Jim. Good question here. In essence, if you're just joining us, the question basically is, hey, ticker symbol MJ, which is the Alternative Harvest ETF, the pot stock ETF out there, formed a valid bottom. In fact, we didn't look at the weekly, but it also had a weekly TD9 count bottoming pattern out there. And Jim's question is, how do I go long when I'm anticipating the market is going to go ahead and pull back? And the only thing, for every ETF, you really should go and take a look at the top 5, the top 10 that will typically make up the majority of the weighting. You'll get a pretty decent feel there. And here, Jim, as we put up this chart, now the cool thing about our TAS market profile charts out here, we look at daily, weekly, and monthly on one screen, and it's very clear. So if this is the lead dog, which it is, about 11% out here, you really wouldn't want to take the long. This is telling you wouldn't want to take the long position in MJ just yet, and the reason is because price has attacked and rejected thus far resistance. The top of the daily, the top of the weekly, and the top of the monthly profile, all occurring this week. So those are the levels that price would need to clear to then say, okay, now we'd have to still go take a look at the chart out there and see if there's something else. But right now, you've got 130.12 on the daily, you've got 130.53 on the weekly, and you've got 130.25 on the monthly out there. So the next one would be Chronos Group. We've got a number of questions. So I think Chronos Group is CRON, if I'm not mistaken. Yep. Okay, good. We're there. So if you take a look at Chronos Group out here, it's got a weekly bullish structured profile, a monthly bullish structured profile. All that looks good. The daily's got a bearish structured profile. So you'd either go ahead and pull the trigger here or in MJ, in essence. If price were pulling back and held support, 593, or if it can clear the resistance level of 657 on the daily, that'd give you upside potential of 708 and 859. I really think, Jim, that what you've got to do is you've got to go through each of the individual stocks, or at least till you get to 50+% to get a feel and answer that question with regard to that stock. Is the reward risk there? And if not, then you just sit back and you just pass on that trade. So I hope that helps you out. Great question. Thanks for writing in, because I know if you've got that question, so does somebody else. The next question coming in here from Lee Vaughn. I love that. And would have to look up that. What's the name of that song? What's his Elton John song? Right? In any event, let's go to hey, Steve-O, stay focused here. Okay, I'll stay focused. So let's go take a look at the Levon's question, which is, could you evaluate IMPUY for entry based on the Rand and silver futures? So what I did here before, I'd gotten the question a little bit earlier. And so to prepare for it, what I thought we would do is pull up the chart. This is Impala Platinum Holdings out here. Now, they're not just platinum. And they're not in the U.S. out here. That's why you see all these gaps out here. And that is why Levon is asking us to take into consideration the Rand and silver. But we just want to make sure. You'd like to make sure that there is a direct correlation. So here on this chart, you've got the actual equity that is being inquired about. Down below that is the South African Rand. And folks, if ever there was a time, wish that, travel were open for you. If ever there was a time to go to South Africa, now is it. Might have been a couple of weeks ago. I mean, it's look at this rate, 0.05, a nickel to buy $1 in South Africa. You want to talk about being on sale? Whew, man, what a great place to be. In any event, here though, that's not what's important. It's really the bottom portion of the chart. Now, this is a 10-day period that I'm using here. When the bars are above the zero threshold level, and most of these bars are, it tells us on average over a 10-day period that there is a directional correlation, meaning the Rand goes up, the market, the IMPUY goes up. And the other question was, can we take a look at this as it relates to silver? And what you're looking for, and Levon already knows this, but you may not know this. And so I thought, well, this would be worthwhile for us to take a look at. So what I'm going to put on the bottom here is I'm just going to put the silver contract. And I'm not even gonna mess with the South African rand. Just at the bottom, what it's comparing is the price of, directionally speaking, the price of silver correlation to IMPU. And here you can also see a positive correlation over the average 10-day period. Okay, so we got that out of the way out here. Now let's come take a look at IMPUY, because the question is, where is the entry price? And as we take a look at it, of course, we'd want to be also able to understand, I would think we'd want to know, what is platinum doing? And you didn't ask me about platinum. You asked me about the rand and silver. I've got to believe that platinum is a big piece of this entity. But your question is, where is the entry point here? The entry point could be today, because price is inside its daily profile now at 712, and it's above its weekly profile. And it has a bullish monthly profile. And in the month of July so far, only 7 days into it, but it's well above the center line of that box, which is 663. So this could be a signal that now would be that time to take a long position. Let's pull over Stevie's other charts out here, see if we can see anything that maybe says, hey, not so fast. Well, your entry price actually was $6.45. Now, we know that, and the TD9s have been working relatively well on this daily time frame. We can see that the bottom that formed out here, let me get my crosshair out here, the bottom that formed on the trading day of March 18th, that was the TD9 count. And then when it made its most recent high out here, well, it had wave number 7. That was letter G. That was on June 9th. That was a TD9 count out here. And what that did, Levon, was it pulled price back to where it had broken out. That's why you really want to understand this TD9 count pattern, because it helps you to objectively identify. There's no way that that somebody would have chosen May 29th as the breakout session. Just no. Well, maybe you would have. But I haven't met that teacher that would have been able to have picked out that May 29th day as the breakout level. But indeed, that was because that TD9 count pattern out here. And you can see price pulled back to 645. It's tested it. It's held. And at this stage here, it looks like price is going to head to the 768 area. Now, that's the daily time frame. Remember, the weekly was above the top of its profile. This also, on a weekly basis, this formed a TD9 count high. Price pulled back. Was really just messing around with Stevie's red line out here, but it's above that right now, and this could be setting up an A to B equals CD to the upside. If we take a look at the monthly time frame chart for you, beautiful thing. This also the TD9s out here. You love how everything happens for us, not to us, folks. If we take a look at this, forming a nice TD9 count high right at the top of its monthly profile out there with great signals. Price pulls back to where? 396. So 396 was really your purchase at the breakout level, and that is held. Price above Stevie's green line. So over time, this looks like this wants to head to 1075 out there. So I hope that helps you out, Levon. I'm not going to go take a look at platinum right now, just simply, not because you didn't ask for it, just simply because I'm going to run out of time before I get to all of these questions out there. So best of luck with that trade. Next question coming in here from... I'm not sure who, but Mart is a part of the email address. So when we get back from this break, what Mart wants us to look at is Goldilocks, and we'll go do that. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're trying to answer the question, just a general overview on gold was the request out here. So what I have up on my screen is my synthetic version of the gold contract and in its profiles. Now, its profiles are going to be different or maybe different than when I put on the current contract, the August contract for gold, specifically on the daily. I know that they are different out here, but that doesn't mean that these are incorrect and the other ones are wrong. Just simply I'm using additional data out here that the August contract doesn't have, and therefore its profiles are different. But be that as it may, here's what we know. Prices trade above the top of its daily. So the daily is in the upper left, the weekly is in the upper right, the monthly is in the lower left, and the quarterly is in the lower right. And what we can see is that prices trade above all of these. That means that price is above resistance. Now, so it's above resistance. Let's take a look at my other daily chart out here. My other daily chart shows the consolidation pattern. So it shows the TD 9-count pattern that went ahead and pushed price down and began creating this consolidation. It's been a consolidation going back quite some time now. But the cool thing about the consolidation pattern is that when you have a break of a consolidation, it provides us with a measured move. And the measured move is equal to the consolidation. So I'm just going to kind of roughing it out right here. So it looks like that's about right. This will give us, so it looks like there's a breakout. Price is above Stevie's green line. Price is above the consolidation pattern, and it's above the bear sash candle from just a few days ago. So what that does, that gives us a price projection, measured move price projection into about the 1907 area out there. So that's the message for gold as of about 1:44 in the afternoon. If gold sells off, gets back below Stevie's green line at 1791, back inside the consolidation, then we would have a different analysis. But right now the analysis is that, looks like gold is breaking through the consolidation, should make that measured move or greater, and that is in the 1900 area. Now, the other thing we want to do, if that's going to happen, if we go take a look at gold, we want to see how gold is trading in the other currencies. So as we look at that, we can see here that gold is at a higher high in terms of yen. So that's a positive. Not really much in the way of resistance in terms of euros. Prices trading right at about a descending trend line. Looks like in gold expressed in pounds. looks like it wants to trade up to its trend line. So we're not seeing anything here to take away from what we just looked at in Goldilocks on the other two charts out here. The last thing that I would do is take a look at where are some pit stops along the way on any kind of a move higher. Well, this 1804 level, and you're trading at 1809, is really a key area. And that 1804 takes us all the way back into the time period. Now, this is a weekly time frame chart that we're looking at. It takes us back to the week of November 7, 2011. And that, in essence, that yellow horizontal line, that's simply the high of that session. In essence, is where gold has found resistance. So if gold can close above 1804.40 for the week, not Tuesday, but for the week, then that suggests the next levels. Next levels, 1829, 1897, 1964. Again, I'm just looking at the weekly time frame out here for Goldilocks, but that it would be my general overview on what gold is communicating to you and I on July 7th at 1:46 in the afternoon. Let's go to our next question out here. Next question coming in from Leonardo. And Leonardo wants to take a look at entry points for NVAX and INO. So I believe those are runners out there, aren't they? NVAX, isn't that one of the vaccine companies out here? Yeah. And you're asking for what? Can you please suggest entry points? Really hard. I mean, so, this thing's at, I would imagine, well, I don't know if it's an all-time high or not. Let me pull this back here. No, it's not. It's at 109.99. It's above daily, weekly, monthly profiles out here. Let me get it rolling here on my other charts, NVAX. You're going to have to see a significant pullback out here inside this equity. But let's go take a look at what it's doing, what its other daily signals are, what kind of TD9 counts, if any, are out here, or any other type of signals, topping signals or otherwise. If we take a look at the daily, you can see, boy, this thing is stretched, but just because it's stretched doesn't mean that it can't stretch even further. So I've just got the potential for Rhodes Momentum Indicator top. It's blown past a prior TD9 count pattern out here and above the top of the profile. So this wants to move higher to where, I don't know, don't have a clue. On the weekly time frame out here, just look at how this thing has moved over the past couple of months out here. Nothing that signals. You're asking what's the entry price? Oh, on the weekly basis, Stevie would say $61.97. You're at $109. Leonardo, I can't guarantee you this, but if this trades from 109 to $62, at $62, you probably won't want to pull the trigger. You know what I mean? Big, huge move. That would be about a 40% move to the downside out here. On the monthly basis, with regard to this, is going to be in month number 7 of a TD9 count. So it looks like it's got a few months before that pattern could identify some type of a top out here. It was a TD9 count that was present at the bottom inside of Novavax. You asked about INO as well. Probably that is another one that's going to be just, as far as where to enter on charts that are moving like, yeah. So this is another one. Now this is the monthly time frame chart. Here's the daily. Okay, on the daily, at least this one has had a bit of a pullback, and so its entry price out here, Leo, would have been 1966. That was the bottom of its daily profile. You're now at 2472 out here, heading towards the center line where both buyers and sellers are present, 2572. So on INO, maybe you get another shot. Right now, as 1:48 in the afternoon, it says no, you won't, but maybe you do. And that maybe you do is 1966. So if you're looking for an entry point, 1966, INO would be the likely candidate for that. I hope that helps you out. Thanks so much for writing in. We had a request here from Hector and the fuel injectors. And Hector is saying, happy Thirsty Taco Tater Tuesday. I like the tater. I haven't had a tater tot. Tater tots. Speaking of tots out there, teas. When was the last time you had a good tater tot? For me, I think that might be elementary school. Too long, right? Not like good tater. Anyways, speaking of taters, that's funny, is gold hitting a home run? Yeah, so we just covered that. So the hair on your neck is standing. Yeah, it looks like it is breaking out of that consolidation out there. So it looks like we have answered that question. But maybe to further answer that question, right, if gold is breaking out, we should see the same kind of pattern inside of the XAU. So let's go look at the XAU out here. Where does Stevie have that? Right here. Okay, we're going to look at the daily time frame for the XAU and see what its signal is to us. So that's the best thing for us to do. So let's pull open the XAU. This is the daily time frame chart. So this had formed a TD9 count pattern, Hector, a couple of days ago, and price is trading above the top of that today. And that says that pattern has been negated. You can see prices stretching. It's moving higher, doing less relative energy, but not until a bearish reversal candle forms will that be a problem. I'll switch this to the weekly time frame. The oscillator and change line is still going to be set at daily, so don't pay attention to it. And the weekly doesn't show us any kind of a topping signal. Let's see, where is this thing at? Wave count wise, just number 4. So, yeah, the XAU I would say is confirming what we just looked at inside of the gold contract. Steve Rhodes with TFNN. We'll be back in just a few.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, and hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 177. S&P is off 9. So let's go take a look at the markets from the perspective of what they're doing. We're going to look at intraday charts out here. We're going to take a look at the opening range. So I'll be able to give you some values to watch during the day. Right now, we just have a market that is consolidating between the opening ranges. And when you say opening range, you might say, what the heck are you talking about, Steve-O? So on this chart out here, we take a look at this chart. You're going to see a number of horizontal lines. Just focus on the solid ones. The solid ones, the black lines out here, if you can make them out, represent the first half hour of the open, which is referred to as which I'm referring to as the opening range for the ES Mini. That's what we're looking at right now. So that's between 6 and 6:30 in the evening. Here is where my cursor is at, my crosshair. That is the range. That's between 3166 and 3177. So what's helpful, for example, like last night, after you get the first half hour under your belt, wait for that next half hour. Does price close above or below or trade with inside the opening profile? If it's above the opening profile, and unless you've got some other reason that the ES Mini shouldn't be purchased at that time, which you didn't, that's telling you it's ready to move higher. Now, in this case here, it moved higher until it created bar number 9 of the TD9 count out there. But I also take a look at the opening range of Asia, and that took place right out here, 2,200 hours, and those are represented by the red lines. And then we've got the European opening range. And so that's at the 3:30 session out here, and those are established by the blue lines out there. So price is just consolidating right now today in between the opening ranges. Typically, when the market is going to move to the upside or to the downside in any kind of momentum way for that day, you will see price clearly break through these ranges, the upper range or the lower range. So the ES Mini, folks, it's really, if it's going to, you see a close above 3173, then it will, the market should close up at its highs for the day. And below 3144, it should close at the lows for the day. Right now, it's just a sideways inside a consolidation. Folks, thanks so much for being here. Stay tuned for a couple of great hours, and I'll look forward to seeing you on wonderful Wednesday. Have a terrific Tuesday, folks.